You want to buy your first home but you don't know where to start? You found the right place. In this presentation, I'm going to give you the tips, the tricks, the hacks, everything you need to understand the home buying process, what it takes, what you're going to need, financially can you afford it, and all those things. So, and at the end, you're going to get access to an ebook that's going to cover everything, and it's the ultimate guide to buying your first home. Welcome to the presentation. My name's EJ Glenn. Your team, your town, real estate and mortgage. This is my team of agents and loan officers. I'm going to go over Philadelphia and the suburbs and buying your first home in this home buyer's workshop. Here's my information below for my real estate licenses and the three companies that I'm associated with: Realty Mark Cityscape, Nexa Mortgage, and Interstate Abstract. So who am I? I'm EJ Glenn, and I started in real estate in 2012. I added the mortgage license in 2017. So now I'm dual licensed and I can represent you in both the real estate transaction and the mortgage. My goal has always been to help home buyers, and just in general, this is my personality. I started out at a young age coaching football and wanting to teach and help people understand complex things. My goal has always been helping home buyers through that process as a partner and not a salesperson. Teacher, educator, guidance, advisor, whatever word you want to put in there to use, that's how I see myself. I'm not here to sell you anything. I'm here to walk you through the process and help you. So Realty Mark Cityscape, our office is right by City Hall in Philadelphia at 15th and JFK. And Realty Mark has offices in 7 states now: PA, New Jersey, Delaware, Maryland, New York, Georgia, and Florida. Full service brokerage of almost 2,000 agents these days. And here are my licenses. I'm also licensed in Florida. I got that recently, and I haven't really done anything down there yet. But I've been licensed in Pennsylvania and New Jersey for quite some time now. So Realty Mark is a great company, privately owned, and they have a lot to offer their clients. And it's my favorite place I've ever been associated with as a real estate broker. I've been with a couple of them. Next, it's Nexa Mortgage. It's a national mortgage brokerage, which is a little different than a bank. If you go to Bank of America or TD Bank, they're not a brokerage. They have their set loan products, and they don't really have much flexibility in those. So the difference with being with a mortgage broker like Nexa, who I'm with, is that I can shop for you. If you have a loan and your DTIs are a little high, or you have some circumstances that may need to be explained, like there's things that I could do on my side, being a broker, that I can go to a bunch of different banks out there and figure out the perfect loan for you. And because not everybody's credit profile or life is perfect, and it's not always easy to get a mortgage. And those big banks are quick to just shoot you down and say, yeah, no, we're not going to, you're not qualified. So that's where being with a brokerage like Nexa, we really help benefit our buyers, because we have a lot of flexibility to find a loan. And we'll tell you up front if we think we can get it done for you or not. So owning a home is the bridge to wealth, both financial affluence and emotional security. That's what I believe, because I've experienced this. I bought my first home, and less than 10 years later, it went up 5 times in value, actually 6 times in value. And I was able to sell that home and move into the next home with a lot of money to put down and equity and those type of things. So, you can really take this first home you're buying, if you do it, with a plan in place to where you don't go right to the top of your budget, and you really feel like you're going to use this to build wealth. You really can, because most homeowners, first-time homeowners, stay in their house less than 10 years. It's a fact for a long time that your first home is rarely your forever home, because things change. You want to start a family, you start making more money, you want to upgrade, whatever the reasons may be. That's kind of why that first home is not your forever home. In the old days it was different. Like my parents and my grandparents, they bought a home, they never moved. So our mission, like I said a minute ago, is to guide and educate you. Our team, your town's mission, is to be your trusted advisor and consultant on making one of the biggest financial decisions you'll make of your life. And that's what we're here to do. We're not here to be high pressure. We want you to feel comfortable with us, that you can ask us anything, come to us with your problems, and we help to solve them when it comes to real estate and mortgage. That's what we're here for. We're advisors, and that's how we see ourselves. This is our different services, and I went over that. I'm with Nexus Mortgage as a mortgage broker, and our team has multiple mortgage brokers on them and licensed in both real estate and mortgage. And we have, Realty Mark for your buyer representation to go shop for homes with you. Let's look online together, and we book some appointments and go see some houses and find your dream home. And then we'll negotiate and represent your best interest when you want to purchase a home. Interest rate abstract is title insurance, and I'll give you a quick overview of title insurance. What they do is it's an insurance policy that you purchase that looks into the history of the property from the day it was built, and make sure there's no tax liens or judgments or bank liens or foreclosure notices, anything like that, amongst other things that I don't want to get into too complicated stuff. But they guarantee you that there's nothing wrong with this property that could come back later and say, you owe this money, or there wasn't this bill paid, or, so they give you the confidence that you're purchasing a home without any issues from the title. Why working with us is right for you? Well, communication, right? You're dealing with one team. You're dealing with me, and a lot of these deals, it's just me. And I'm here to answer all your questions. And I want to make it as streamlined and least stressful for you as possible on your road to homeownership. And that's why we're the right team for you. We just are. Again, I want to stop here. And, your team, your town, real estate and mortgage. If you would like, comment, subscribe down below. Our details are down there. Reach out to us with any questions. The more you comment down there, the more exposure this channel gets. It can help other first-time home buyers. Share this video to your friends and family if they're in the market also. All right, let's get into the nitty-gritty. Steps to get prepared to buy a home. So your credit profile, what does that need to look like? Well, first, you should go on your own and go to annualcreditreport.com and get a free credit report with scores. So it's usually a 7-day trial. So they'll send it right to you, right? And then just end the trial so you don't get charged. You're going to have to put in debit card or credit card information, but get it. As soon as you get it back, don't forget, go in there and cancel your subscription, and you get one a year for free. So you want to look through that. Has there been any late payments in the last 12 months? Have you been out car shopping and there's a bunch of inquiries, or are your credit cards maxed out? All those things are going to be a negative towards your credit profile when you want to try to get approved for a mortgage. So you want to see that first. And if you do have some issues, reach out to me and we'll come up with a plan to rectify those issues and get you in the best spot to buy a home. Your work history. Stable employment, 2-year work history. You don't have to be a W-2 employee. You could be self-employed. And there's other things that do that. But this is just a basic overview. You don't want to, if you are a W-2 employee, you don't want to quit your job or, change jobs during the home buying process. That can end the deal and the bank can walk away. Your assets, needing 5 to 10% of the purchase price. Don't freak out about that. You can get a gift from your parents. You can get seller assists. There's down payment assistance programs. This is, like I said, this is just an overview. There's a lot of moving parts to all this mortgages and real estate stuff. So this is just basic. So, if you want to buy a $300,000 home for your first home and you have some money in the bank, look to have maybe $10,000, $15,000. And that will put you in a good spot. If you have less, it's okay. We can look at that. So don't freak out saying you don't have the money to do it. This is why you got to talk to people, pick up the phone, and get the information, not text, not email. Have a conversation, and we'll get the questions answered for you, and we'll point you in the right direction. And maybe there's something I can tell you that, hey, you don't need that much money. Like maybe you only need a couple $1,000s, because that exists out there. It just depends on where you're looking and what your situation is. Setting your expectations. So this is an important one, right? Be realistic with your budget, what you can afford. You do not want to be house poor, right? You want to enjoy your life. It's your first home. It's a big milestone. It's a great step towards your future. So don't run right to the top of your budget. If you get a pre-approval for $350,000, don't run right up to that budget, and that's where you want to buy at. let's sit down and talk about it, and we'll lay out the pros and cons of all that stuff. And maybe it's the right fit for you, maybe it's not. But you want to set your expectations, because everybody wants to run. No, I take that back. People do like to run. They see a house at the top of their budget or over a little bit. Oh, I love this house, I got to have it. Remember, this is your first home, and most likely not going to be there as your forever home. So set your expectations and go in with an open mind on about how to go through this process that's going to benefit you in the future. That's what you're looking for. You're looking for this first home to set you up for your future and your next home that you're going to buy. So what is PITI? You're going to see this a couple times throughout your experience when you're buying a home. So PITI is principal, interest, taxes, and insurance. And that gets associated with your front end DTI. DTI means debt to income ratio. So the way you come up with this number is if you make $10,000 a month, and could be by yourself, could be combined with your wife, girlfriend, husband, spouse, but whatever it is, and you multiply that by 0.31, that'll be the maximum that the bank would lend with a 31 front end ratio. And that's these four things included in that calculation: principal, interest, taxes, and insurance. So 3 of the 4 is actually your monthly mortgage payment is included in these, and you pay insurance separately. But that's what that means. So like I said, these are not concrete numbers. They can be a little higher, a little lower, but this just gives you a good idea of what price range you're looking in before you were to call me, and this gives you an idea of how to shop and look for the houses in the area that you're looking for. If they're $300,000 and the interest rate is X, go to a calculator, look, see what it says, and I'll give you an idea of what you could afford or what those types of houses are in that price range. What is the back end DTI? Well, the maximum amount on the back end DTI is 36%, and same thing. You multiply 0.36 times 10,000, you get $3,600 a month. You combine that with your front end. Now that will be super high. That would be almost 70% DTI. If you're maxed out like that, it'd be very hard to find a lender without explanation or without it'd be hard to get you qualified for that. But these are the maximums that are allowed. And what does that include for the back end ratio or DTI? Student loans, car loans, credit cards, anything that you're paying on a monthly basis in installments, those type of things would be included in the back end DTI. But again, this is the reasons why you need to talk to someone that understands this and can explain it to you, and look at everything that you got going on and see if we can get you qualified. Before you call real estate agents, this should be your first step. So what are the common buying concerns? Not knowing what to look for, right? So it's an overwhelming process, especially for your first time. And there's nothing wrong with that. Things are new. Everybody has a day one. Everybody has a first time of what they're going to do. So maybe you want to sit down and make a list of must-haves, right? And these are like non-negotiable. I must have 2 bathrooms. And I'm not looking at homes without 2 bathrooms. Well, then you just don't look at homes without 2 bathrooms. And then there's other part of this might be I can live without. I can live without a big backyard. I can live without the 4th bedroom. I can live without central air conditioning. Those type of things. And then the maybes. What's on the fence? So trying to narrow that down and get an idea before you physically go out and start looking and spending the time to go look. You should really narrow this list down, and it'll make it easier, and try to keep it straight on what you're looking for. Once you do that, you want to narrow it down to maybe your 3 to 5 favorites you want to go see. If your list is a big giant list and I got 20 homes on there, I want to go see them all. That's going to make it very difficult, and you're going to get confused. It's going to take a lot of time, and you're going to get mixed up on trying to keep it straight. Which house had the beautiful kitchen, which one had the full basement that I wanted, which one had the giant backyard. It's going to get hard to figure out which house is which if your list is too big. So 3 to 5, and if you go see those first 3 to 5 homes, you don't like them, cross them off. 3 to 5 more. So use that process in small batches. It's really going to help you keep everything straight and organized. Going, like I said earlier, going right to your top of your budget, in my opinion, is a mistake. Just because you don't want to be house poor, and it's most likely not going to be your forever home. If it's right next to your best friend or your family on the same block and you plan on being there forever, different story. But in general, homeowners only stay in their house average 7 to 10 years. So another common mistake is not knowing where to look. Right? Philadelphia and the surrounding areas is very diverse, and it changes town by town, block by block, city neighborhood by city neighborhood. So you really want to do your research and what is it that you're looking for, right? Take the time to sit down and, like I said, the must-haves, the maybes. That also goes with where you want to live. How, traffic is a concern in and around Philadelphia. How much of a commute do you want to make? Where do you work? Do you want to live in, South Philadelphia or Fishtown or Manayunk, but you're working in South Jersey, or you got to go out, past King of Prussia? You're going to start having 45-minute to hour commutes, so knowing where to look and what fits your needs is really a big part of this process too. So you're happy with where you buy, right? And then what are those reasons for that particular neighborhood? Like if you wanted to be in that, Fishtown, East Passyunk, Manayunk neighborhood, well, I would assume that you're looking for something that's vibrant, has nightlife, bar, restaurants, hip kind of parts of town. If you wanted to look down where I'm at in Packer Park, it's going to be much quieter, more laid back, almost has a suburban feel to it. So knowing and narrowing down the neighborhoods that you want to start looking in, is this, do you plan on being there longer? Is this where you're starting your family at? So, these are the things you want to really sit down and come up with a plan with before you get out there looking and getting scattered all over the place. It's not going to help you. It's going to make the decision harder for you. And I'm going to reiterate this for the third time. Don't go to the top of your budget, and you're probably not going to stay in this home more than 10 years. What's our simple buying process? Right? You start your search online. You send us the homes that you're looking in, the areas that you're interested in, and we'll also search online for you, set you up in our portal, and with our app, you can get the most accurate, up-to-date data from the MLS. We'll send you, instead of using Zillow or Realtor.com, which you're free to use, but we're going to, we have a system set up where you can search, without all the ads and all that kind of stuff, and you can search through that, and you find a couple houses you like. We'll talk about them, and then we'll set up an appointment and a time to go see them. And then we go look. Let's go shopping, right? We'll go shopping. We'll see the neighborhood. I typically like to tell people, right, check out the neighborhood beforehand. Take it a half hour, an hour before our appointment. Drive around, or if we're not meeting for a couple days, go out and have lunch close to where that is. Get to see what's going on around there. I tell people try to pick nicer days so you see what's going on, people out and about, those type of things. So they're the kind, when you go house shopping, you don't need a real estate agent there with you. And that may make your mind up to call me and say, hey, yeah, that neighborhood's not for us. It saves us time, saves you time, us time, and we move on to the next neighborhood. And then when we're actually out there and we're in the homes that you chose that you wanted to see, take lots of pictures and notes. Staying organized is the key to this process, so you can really make an informed decision and keep it clear on which house, the pluses, the minuses, and all those must-haves and maybes and can't live without, those type of things. So you want to take a lot of notes, takes a lot of pictures. And one little tip I like to tell people is when you're taking pictures, when you're leaving that house to go to look at the next one, take a picture of your hand or something dark or black, the ground, whatever, or a screenshot, so it separates the pictures in your phone, so you're not getting them mixed up. That's the next property. All right, so we found the home. You want to make an offer. What next? So we go in, and I'll go in and I'll look around and to what the right offer may be and see what sold recently, how long it was on the market, and they call them comparable properties, and it's that's what the appraisers do also. They'll see what sold in the last 3 to 6 months. And if there hasn't been, they'll go back, 12 months, and they'll come up with a price that the bank will lend the maximum amount the bank will lend. So when we make an offer, we're going to go and look at, what the last home sold for that's very similar in that condition. And so we want to come up with the right offer so we can get you this home. A home inspection. Once an offer is accepted, in my opinion, it's a must to have a home inspection. In today's market, plenty of buyers are waiving their home inspections because how competitive and crazy it is right now, because there's just not enough homes on the market to meet buyer demand. So even if you wanted to make an offer and waive the inspection, I would still spend the $500 to get one. And the difference with that would be if it's in the contract that you're getting a home inspection and something comes back that say, hey, something needs to be repaired, you negotiate that. Either the seller has a concession and lowers that. Say it was $2,000 to fix something. The seller would take that off the sales price or fix it, one or the other. When you waive the home inspection, you're saying I'm not going to come back to you to request you to either fix or lower the price based on what the home inspection found. So you're waiving that. But you still have one of my opinions, so because the home inspection goes over the heating system, the air conditioning, the plumbing, the electrical, all the major components of the home that are important. The home inspectors do a very good job of giving you a report on that, so you know what you're getting into. So it's up to you. It's a must, in my opinion, whether we negotiate about it or you buy the home as is and still get the inspection. We'll discuss that when the time comes. So now we're past, and now everything's accepted. We're under contract, and the bank's now involved, and they're going to order the appraisal. So the appraisal is the number that someone goes out, a certified appraiser, goes out, evaluates the home similar to a home inspection, but comes up with an actual value. So say that number is $300,000, and the appraisal says this home is worth $300,000. The bank will not lend you a penny more than $300,000 to buy that home. Simple as that. Now, if the seller wants $320,000 and you still wanted to buy the home, well, you would need that $20,000 cash. The loan amount won't be above $300,000. So now you have the offer accepted, appraisal's done, we meet, closing day, we sit at the table, you're going to sign all of the documents, all the loan documents. It's going to take, half hour, 45 minutes or so. I'll be right, either me or somebody on my team will be sitting right next to you, answering any of your questions. The seller is usually there. They may not be there, but they usually are. And then so a representative from the title company that we talked about earlier in the presentation will handle the closing and handle all the documents. They are a third party that is, what's the word I'm looking for? They're an independent third party that oversees the closing process and makes sure it's all done right and all the contracts are signed, explained, and done right. So, and then when that's done, you're a homeowner and you leave with the keys. So before we leave this presentation, first I want to thank you for sitting through this with me. Here's my contact information. Call or text me. You can book a meeting for me to call you, or you can email me directly at info@yourteamyourtown. And the booking calendar will have availability dates for me to give you a call, and we can block out a half hour or so to discuss your needs. Text message, if you're going to have questions and detailed questions, you got to pick up the phone. Text message isn't going to do it. If you want to text me and say, hey, you're available to talk later, that's fine. Call, book a meeting, and let's get the process started if you're ready to go. Again, here's the rest of my contact information. Here's the companies I'm associated with. My name's E.J. Glenn from Your Team, Your Town, Realty Mark Cityscape, Next Mortgage, Interstate Abstract. Get in touch with me for all your home buying and mortgage needs. Thank you so much. I hope to hear from you soon. And let's get out there and find your first home.